Trailing take profit is a great way to squeeze just a little bit more profit out of your smart trades, but it's not always the best time to use it, and here's why. Hey guys, it's me, Moon and Papa. I have courses on thebettertraders.com, and I'm also a 3 Commas ambassador. And over the last 4 years, plus, I've been using 3 Commas, and Smart Trade was the first thing that stuck out to me as gotta use it, gotta have it kind of a tool. So here on Smart Trade, it's come a long way. And a couple of years ago, they added this trailing take profit. Now we could read this, but why are you watching the video if you could read this, right? Essentially, the idea is this: trailing take profit will follow whatever the max price is at a set deviation percentage. So in layman's terms, once you hit your target, then it's going to trail below the price at whatever percentage you set it, whether it's 10%, 20%, or 1%. So on a chart like BTC, let's say, for example, and spoiler alert, terrible time for trailing. This is almost like an etch and sketch to me. You know those etch and sketch toys? This looks like someone's trying to write their name on the chart, and it's just they want to do like a swooping J, but it's the only name it could be is woof, 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 woof. Anyway, this is my mind. Welcome to my mind. So if we happen to have a trade, like right here, we had a long position, we decided let's open up a trade right here, and we want to take profit right there, but 5%, maybe we think it could go as high as this level right up here. So in order to maximize our profits, we can use Smart Trade's trailing take profit to do this. So the way that works is basically like this. This is our target. This is where we take profit on 3 commas. But then below this amount, we have another line. And this line is always 1%. Actually, let me do it with a different line. Let me do it with this one. We're going to do it like this, 1%. Okay, so this is a little bit crude, but I think you're going to get the idea. So here's how this works. You open your trade, the price moves up, and it hits your target at 5.24%, which is great. That enables trailing take profit on 3 commas, which basically is a trailing stop loss, except it's on the upside. So it cancels your stop loss. You don't have that anymore. And now you're just in trailing mode. Or sometimes when you get the pop-ups, it says trailing activated. It's just letting you know that now it's taking action. So what happens is every 1% that the price moves higher, it's going to move your stop loss up. So we have to move in 1% increments. This was our target here at 5.24. It's moved up another percent. Therefore, we're going to move up another percent after that. And you can see here, this is where we would get stopped out right there. So instead of taking profit at 5.24%, now we're actually taking profit up here at 6.46%. So again, the idea of trailing take profit is pretty simple. You're taking advantage of upward momentum and you're getting a little bit more profit. So let's talk about some logistics here. Depending on the market you use, liquidity is super important. For a chart like Bitcoin, you should not have any problems, even if you're some crazy whale, because the order book is so tight. There's so much volume for BTC USDT, especially on Binance. Even with leverage, you can use a lot and get away with it. But if we're looking at something that's a lot lower, maybe something like this one, and we're on a low volume exchange like KuCoin. So if we were to do the same thing, we have a long position that we want to enter, and we enter our long position here on the chart. Here's our stop loss because we are responsible traders. Let me move it up a little bit higher. And we enter here, we'll say. So we have our stop loss and we want to take profit here. But if the price moves up higher, we want to do the same thing. We want to take advantage of that move. So we're going to set it to 1%, and every 1% that the chart moves up higher and higher and higher and higher and higher and higher and higher, you get the idea. What was supposed to be a win at 8% now is most likely a win up here at, hypothetically, 20%. So the idea, the prospect of trailing is great, but here's the problem. Looking at the spottiness of this chart, knowing the volume for this chart is actually super duper low, the trick with trailing is that you don't want to be greedy. The trick with trailing is that, for me personally, I never ever use 100% of my order size and use trailing on it. That's because I like to take profit on the way up. So let me talk about that for a second. So hypothetically, if we are trading a chart, we want to take profit at 10%. And again, we never ever just set random percentages. We always look at the chart first. So let's say we looked at the chart. We're taking profit at 10%. We're going to use split targets. We're going to take 40% out at the first target to secure profits. And let's say that we think it could go up even higher. We're going to set the next one to 30. And then the last one's going to be up higher, like whatever. We're just making an example, so it doesn't matter. But that last one that's higher, where is that number? 86914. This is 47. Let's just make it 50 to make it a nice round number. What I always do is, for one, I usually use up 60 to 70% of my order first. Or rather, let me say it a different way. I sell 60 to 70% of my order size first with split targets. Then I use 30% of my order size for the trailing bit. Why? Well, going back to this chart for DIA, it looks like we should be able to make 20%. I mean, hey, we could even make, what, 25, 24%. But the reality is that we have to sell to somebody, right? And the reality, too, is that in real time, I guarantee you that this was just not a straight shot up. It usually does a little bit of this, a little bit of this, a little bit of this, and then finally it falls down. So with that in mind, just because it moved up that high doesn't mean that we really could have made 20%. Maybe it's more like 16, way better than 8. No, I'm not trying to downplay the profit potential, but I'm also trying to help you understand why I divide my orders up and why I take profit on the way. Because when you use split targets set here to limit order, these are set fixed limit orders. When the price reaches 0.065 BTC, then it's going to sell 40%. When it reaches 0.072, it's going to sell 30%. So what happens when it hits this target? This last target is seen as a market order. And the only way for trailing to happen is using a market sell order. So as the price moves up higher, it moves the stop loss up higher and it just follows underneath it until finally the price comes down, and that's when it sells. So in that sell order, because the price is moving up and that's the trailing stop loss, or sorry, trailing take profit is moving up higher and higher and higher, it has to be really fast. So there's inevitably going to be slippage. Looking at DIA BTC, there's going to be a lot of slippage on this chart. And slippage is simply defined as not having enough liquidity in the market. So what happens, instead of securing a nice profit up here, you might actually sell down here. And slippage, or rather the liquidity of the order book, also means that even if you actually have an order up here, the problem is that sometimes, and it's happened to me on 3 commas, even with a market order, it won't trigger because it just wicks. It's a flash wick. It's not fast enough for their service to pick it up, and it just fails, unfortunately. It's happened to me only a couple of times, but it still stings. It's like, come on. So when we're thinking about charts with lots of liquidity, it shouldn't be an issue. So we would have definitely gotten our 6% or whatever that was instead of 5%, 6.24%. So that's great. That's one really great way to use trailing take profit to squeeze a little bit more profit out of your orders. But here's the problem. When we're in a sideways mishmash market like this, that's utterly garbage. I mean, I think they're trying to spell manipulation. It almost looks like it. MANIPULATION. Maybe they're doing the A right now. It looks like manipulation. It looks like a skull. It looks off. Anyway, all this stuff could be great for trailing, but the thing is that this range is so tight. If we go back to the daily time frame and we look at when we're actually trending, like this, we're trend trading, we're riding that trend, then we can use trailing to actually help us make a lot more with our trades. So that leads to the question, how much percentage to use? Well, in this example, this last target was using 50%, or sorry, it's using 30%, but at a 50% target. Wait a second, two numbers, what does that mean? So I have 30% volume left of my order. I'm buying, or rather, I'm using this much BTC to buy Ethereum at this price. So the last bit of my volume, 30% of my total volume, worth this much Bitcoin right here, I'm going to sell that at 50% above the price at which I enter, okay? So my golden rule is that I always set my trailing take profit to 10% of whatever my last target is. I teach this in all the courses. I talk about it a lot on YouTube and in the live streams. This is no great secret, and I want to show you why. So let's go back over here to our Bitcoin example, okay? Here we are, we're looking at this and it's doing well, like this is a great chart. We can see where we've entered. It's a good entry, but let's say that we were greedy and we have our trailing take profit set to the equal amount of where we are in this trade. We're using 5%, which would basically be 100%. So if it's at 5%, then we're setting it to 5%. So the reason why this is bad is that in order for us to make a profit, trailing will kick in at 5%. So we have to hope and pray that the price actually moves up another 5% to actually take profit. Now, right here, it does. But here's the problem. The price doesn't continue moving up and it falls down. So we actually get closed out at the same exact price where we're going to take profit anyway. Compared to if we were more conservative, even if we were just doing, 0.5% would be a little bit tight. And that's one thing about doing this is that you really want to make it 10%. So if we're taking profit at 5.2, then 0.53% would be 10%. It's pretty small, it's pretty tight, but at least you would squeeze out that little bit. You can see it. So here it goes up, and then we go up like that. So you would still get that extra 1% out of this trade. So if this were set, we'll play devil's advocate. If this was set to 2%, right? What if it were set to 2% or even half of whatever this is? So we're looking at 2.5. So the price moves up another 2.5%. So that means that if the price falls down to our entry, then we're closed out. It has to move up another 2.5%. Like this, it does, and then we get stopped out. So this one would have worked out really well. But that's not always the case. And to be honest, one of the big themes in the Better Traders Journal right there is to always be satisfied with any amount of profit. And I'm not really in the mood to ever risk profits just to squeeze out a little bit more. I want to take profit on the way up, which is why I use split targets. And I always want to keep my trailing take profit set to 10% of my last target's profit target. So this is essentially how this would look, where I have 40% of my volume at the first order, 30% of the next, 30% of the next. My last target is 50% higher. Another reason why I like to keep it 10% is that it also helps me to make better decisions going into it. This is actually a terrible range for long-term trading just because it's obviously accumulation. So this is not a good place to be compared to if we were taking even a short position on BTC. If we entered a short position right here and we had trailing working with us, let's take our short position right there. And we are willing to risk losing 3.7%, but with a target looking at our previous targets down here at basically 30K. I mean, that's a great risk to reward ratio. We have to take this into account. We can't just say, well, I want to do this and that. So if I have 15%, that means that I can risk another 1.5%. So let's go ahead and measure that out. There we go. So you can see how small that is compared to the actual price action. So we would have actually hit it right here. So this is when we hit trailing, and right there, we actually would have stopped out there, which means that instead of us making our 15.6%, we would get stopped out at about 14.2, 14.4. And the reason is because the price retraced. It hit our target. It moved up that set amount of deviation percentage. So it deviated 1.5% away from our target in the opposite direction. So that means we don't secure that 15% profit. It's a little bit less. Understand that trailing can work both ways. You can make a little bit more, but you could also lose a little bit more. So that's, again, why I don't use 100% of my total volume with trailing. I always just use a portion, just a small bit, like 30%, and that's what I'm putting towards trailing. It always depends on the volume. It depends on the order book. It depends on the chart. Sometimes I might use less for trailing. Sometimes I might use more. I'm never just going to say it's the same thing every time. I always have to think about my volume. I have to think about the order book. I have to think about liquidity. So I wish there were an easy, like, you always do this for this, that's done. No, you can't do that in trading. You have to be flexible, and you have to understand that certain charts behave a certain way, and we have to respect how they behave, and we need to play within those boundaries, which is actually more freeing than just kind of saying, well, it's the same setup for everything. And it's not the case. So I'm not going into, as you can tell, trailing buy and trailing stop loss. I'm going to save those for future videos, but I did want to talk about what trailing take profit is and how to use it and when it might be a good time to use it. So when is it a good time to use trailing? Well, it's a good time to use trailing when we are on a trend like I just showed you. When the price dropped 15% is a great time to have trailing enabled because we know that we're in a strong trend. It doesn't make sense to use trailing take profit when we're in a really tight sideways range. That doesn't make sense at all. That's a bad idea. So trailing is best left to trending markets, and the TBO is great for letting you know when we are in a trend and how strong or weak the trend may be. That'll give you more confidence to let you know, well, yes, I can definitely use trailing on this and let it ride, or no, I really want to tighten up my trailing and I don't want to overexpose my position. I want to make sure that I'm securing profits, and you should be securing profits in any market anyway. So that's it for this video. Let me know how you are using trailing in the comments below. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.